I'm Jessica Clarke, owner of the Salon at the JW Marriott, Marco Island, and CEO of DataSet Go. We are here today to tell you about the CARES Act Employee Retention Credit. This is so important to me as a business owner. With me today is Al Wagner, founder and CEO of TruPayroll.
Thank you, Jess. I appreciate that, and thank you for being here and watching. I'm really excited to share the information with you today because it is so vitally important that you understand how this credit works and what's at stake. Whether you're a customer of TruPayroll or not, we can help you, and you should take heed to what we're about to share. The CARES Act provided both the Payroll Protection Program loans, the PPP loans that we're very familiar, most everybody is really familiar with now, and the Employee Retention Credit. Originally, those were mutually exclusive. You either had to take one or the other. In the beginning, most of us didn't understand exactly what the Employee Retention Credit was going to be able to provide, so most of our clients ended up using the PPP program in order to stay in business and get through all of what happened last year. So several months ago, Congress changed those rules, and now employers can actually take both the PPP program and the Employee Retention Credit. So as we know, the aim of both these programs was to ensure that you as the employers could stay in business through all of the government mandates and lockdowns and whatnot and the temporary suspensions, and some states still have this going on. Qualifying employers, and here's what gets really, really exciting. Qualifying employers can get up to $33,000 per employee. Not in total, per employee. I don't know about you, but that sure is a whole lot of money.
It is.
And the credit, when you get it, can be applied towards future taxes, or you can get cash money refund.
Thank you for that, Al. Who qualifies for this?
Well, that's a great question. Who does qualify? So the answer is basically in two parts. The first part is the year 2020, and the second part is going to be 2021. So for 2020, employers that have 100 or less full-time employees can qualify. In 2021, it's employers with 500 or less. Notice I didn't say full-time, but 500 or less employees. So, and once you have that qualification, then there's a couple of tests that you have to pass. And they are one or the other. It's not both. So the first method of testing is using what's called gross receipts. So depending on what your comparison is between 2020 and 2019, you may or may not qualify. The second method is called partial suspension of business. So this method is going to take a look at what happened as a result of government orders and mandates in your business and whether or not you had to suspend part or all of what you were doing, regardless of industry. What I want people to understand about this is that suspension, I said it kind of fast, but it's full or partial. So you didn't have to be totally closed, and you could be operating, and even if you never closed at all and your revenue went up under this particular test, you might still qualify. So that's really, really important. Your gross receipts may have gone up, so you may fail test 1, but if you passed test 2 under the suspension rules, you could still qualify.
Awesome. So I heard you say I can take advantage of both the PPP and the Employee Retention Credit. How does that work?
Well, that is very interesting, and you did hear me say that. So simply put, when the rules changed, and you could claim both PPP and the Employee Retention Credit, the caveat to that is you're not allowed to use the same set of wages. You can use the excess cost from your PPP loan and apply that towards the credit. So what that means is wages paid in excess of the forgiveness amount and wages paid to employees between, so if you've gotten around 2, in between, before or after those wages are also eligible to be applied towards the credit. I'm going to make sure I'm covering everything. So does that make some sense?
It does. So
Okay, great.
let me clarify what you said. If I got a PPP loan of $100,000 and had non-payroll related costs like rent and utilities, let's say about $40,000, I had in payroll and expense and in payroll expenses $200,000. How much would I be eligible to use towards the employee retention credit?
Ooh, now that's a great question and an awesome example. So in your example, there was a PPP loan of $100,000, and there's non-payroll related eligible costs, the kind of rent, utilities, and if you have a mortgage interest, that kind of thing, and that totaled about $40,000. And now you're in your forgiveness application. That means you're about $60,000 still shy. So you apply $60,000 of your $200,000 of payroll, and now you have your whole $100,000. Your PPP loan will be forgiven.
Okay.
And so what's that do with the other $140,000 of payroll that's still left in that period? Well, now, according to the rule change, you can use that $140,000 and apply it directly to the employee retention credit. All things being equal, that could mean you could be eligible for up to $70,000 in tax credit money. Again, that could be cash money in your pocket.
Not bad at all. Not bad.
Right?
I'll take it.
Let's flick it out.
So, and I can see how this gets pretty confusing. So, how much money is on the table?
Well, it's going to vary from customer to customer, employer to employer. And there's a lot of money. That's really potentially a lot of money on the table. So what are we really talking about? In 2020, it's annually. So what you're going to look at is how many employees do you have? And essentially you can multiply that by $5,000 per employee. Now, doesn't mean you're going to get that. We still have to go through all of the hoops to see what you qualify for, but that's $5,000 per employee. In 2021, that got divided into quarters. So for every quarter that you have paid employees, you could be eligible for up to $7,000 per quarter. $7,000.
Wow.
That's $28,000 plus 5. So this goes on through the end of 2021. So you could get a total of $33,000. You heard me say that before. $33,000 per employee. That's the max that you could get. So if you had 10 employees, let's do some simple math. $330,000 potentially. Now there's going to be some calculation in there, so it could be less. It's not going to be more, but it could be, and it might be less.
Okay.
However, just do some ballpark math. Restaurants. You got a restaurant, you got some part-time, full-time, you got the whole mix, you got 50 employees.
Yeah.
Cha-ching. That's a lot of freaking money. Now, what you want to make sure of is you don't get this wrong. Who likes an IRS audit? That's like getting your teeth pulled, right? Nobody wants to go through that pain. So why I'm so super excited about sharing all of this is because we at TruPayroll have partnered with a national firm that specializes. This is all they do, guys. This is all they do. They specialize in helping employers obtain available tax credits. One of the tax credits is, of course, the employee retention credit. They know what to do. Why is that important? They're going to not only do they do all the heavy lifting for all of our customers in how they go about actually approaching it, and the whole system they have in place, they back up what they do. What does that mean? Should you be selected for audit? Could happen. And the IRS wants to see everything that goes on. Then they'll be there to represent you in the audit at no additional cost. So they back up what their work, and because they're going to have that file for you. So,
Wow. Well, what information do customers need to get you in order to get this figured out?
well, can I share something else that I forgot? I'm glad I looked down because there's something really important.
Let's hear it.
They're going to do all this work on a contingency basis. You don't pay a dime, you don't pay a penny unless they're successful at getting you money. Period. You don't get money, they don't get paid. So we're going to do some discovery in the beginning to make sure that you qualify. If you qualify and they move forward, you can bet your bottom dollar that you're going to receive something, some value, and we'll know what that is. And they get paid on contingency, and you could budget 20% for that. Of the credit that you receive, they'll bill you at the time that you get that credit. Not before, after.
Gotcha. All right, cool.
Listen, I'm a retired recovering CPA, right? Former. I've done a lot of business in my time. This is a good offer. You don't see many CPAs that are saying, hey, I'm going to back my work for free later if you get audited. No, there's going to be billable time. Not now.
That's awesome.
No money out of your pocket, and you get 100% backed representation should there be an audit.
That sounds easy enough.
Easy enough.
So what forms need to be filed to claim this credit?
Well, maybe we should talk a little bit first about what forms, or not forms, but what do they actually need to provide?
Okay, all right. So what forms do we need to provide?
All right, great. So if you're a TruPayroll customer, it's really simple. We have all the payroll reports. What we don't have is your revenue receipts. So we need some quarterly reports that are going to compare 2020 to 2019 and done by quarter, and so that we can do that particular testing. We also need to know your first round of PPP if you got it. And if you didn't get it, it doesn't mean you're not qualified for the employee retention credit. These are mutually exclusive opportunities. So whether you got the PPP or you didn't, you can still do this. If you got the PPP and you have gone through the forgiveness process, we need to have that forgiveness application and all the detail that went into that, because we have to determine how much in wages were actually applied.
Got it.
If you have gone for round 2, dos. We are in Florida, right? Spanish is kind of the second language here.
Yeah.
So, dos. Sí.
Dos.
If you have gone for round 2, we need to know the date that you got funded and the amount that you got funded for. That's going to determine how much, again, in wages we're going to actually be able to apply to the quarters that are affected. Let's see. So, one other thing, if you haven't filed for your first round of forgiveness, there's actually an interesting opportunity. We're going to need to discuss that on an individual case-by-case basis.
Nice. Okay. Well, then that sounds easy enough.
I think so. We're doing all the heavy lifting for you. You just got to let us have access to it.
All right. Well, did you already say what forms need to be filed?
I didn't.
Okay. What forms need to be filed?
So that's not too hard either. There are basically 2 forms, a 941 or what's called a Form 7200. And when it's the 941, that's going to apply to 2020. Of course, hopefully you've all filed your second, third, and fourth quarter 941s. That means we've got to file amended returns. We do all that work for you. I don't care if you're a TruPayroll customer or not, we're going to do that work for you. In 2021, if the first quarter, if the first quarter is something that we can obtain credit for, then we'll have to file again. Hopefully, you filed your first quarter forms already. We'll have to do an amended filing for that. When it comes to the second, third, and fourth quarter of 2021, well, they're not filed yet, so we can actually claim the credit right smack dab on the filing when it goes in. If you're a TruPayroll customer, we can add that in, and it goes and it's part of the submission. So there's nothing further to do after that. We'll work hand in hand with the team to make sure that we have the proper amounts dedicated onto that quarterly filing.
Nice.
If you're not with TruPayroll, I can't vouch for what can or can't happen. If there is a need to, if the system that you're using files the return without the credit claimed, we can always file amended returns to get that credit claimed. If you want to do what's called an advance payment, so you might be able to get the money up front, then it's a Form 7200. I would recommend that we take that case by case as well and have a discussion to determine what is the best method for actually claiming these credits for the past, present, and future.
Gotcha. Okay. Well, to summarize, what is, in the employers may get up to $33,000 per employee.
3-3.
There were, so there are several ways to qualify.
There are.
All right. And you have a team of professionals ready to represent customers
Sure do.
for no money out of pocket. Unbelievable. That's huge. So how do we get started with this?
This is pretty simple to get started.
Nice.
Customers complete our intake form, upload the supporting documents. Our team will review it and then send an email to schedule a review meeting. And then it'll be sign an engagement letter and we're off and running.
Awesome. So this was very, very valuable information. Thank you so much. If you have any other questions, just book an appointment online. Thanks so much. Have a great day. Bye-bye.